Okay. It's always interesting to watch the market close on Fridays because all of my options expire at close of market, and whether or not they're assigned or expire without being assigned depends on the closing price. All but one of my 24 option contracts have a strike of, well, all of my contracts have a strike price above $7. So if it stays below $7, none of the options I sold over $1,000 worth of premiums will be exercised. This is the fun part. I went down to the lobby to get myself a treat. If none of the options that I sold are exercised, then it means I'll have 2,400 shares of stock to cover 24 more contracts. And hopefully I can get some decent premiums at $7 strike, and certainly at $7.50 like I did this last week. The downside of it is I'm using about 30% of my margin, which is costing me about $1.50 a day in interest. And of course, on a serious multi-dollar drop in the price, it could subject me to a margin call. Not likely at all, but two events could cause that to happen. One would be the company to suspend dividends, or we get into a nuclear war over in Europe. So, and the latter is, if that happens, the price of the stock and my investment in it will be the least of my worries. Well, it's 3:50 p.m., 10 minutes to go. I would really like to see the ending market price be $7 even, but it would have to jump 5 cents or better to do that. But that's all right. 5 more minutes. It's going down a little bit, increasing the likelihood that none of the options I sold will be exercised. It's important to stress at this point that contracts that are not exercised yields 100% free cash flow. The reason being is the cost to replace the goods is zero. So the free cash is whatever the premiums were that I collected. And this last week, I collected pretty good. So the price stayed pretty steady. These last few minutes, you'll see it bounce around a good bit as traders trying to establish their position for the weekend. This is about as exciting as it gets. On one of my web pages, I talk about how it should be boring. If it's boring, you're just collecting money and The only thing going on is the cha-ching, cha-ching of the cash register. So it should be boring. 2 minutes. All right. Minute to go. Okay. The option market is closed. I'll give it just a minute to be sure there's not any late trades coming in. All right. So all of my contracts are going to expire without being exercised. And to put that in perspective, let's see, I collected on those 24 contracts. Let's see. 824, 395. What was that, about $1,200 in premiums last week? And all that's free cash flow. Not a bad week. All right. Well, I've made my point. And tomorrow I will be settling, my broker will be settling my account. So by noon, I should be able to place new orders. But this is going to be important. The next video is going to be important because for the first time, I'm going to capture my screen and show actually how I place the orders, what information I'm using to base my decisions upon. So hopefully you'll find that very educational. Please subscribe, hit notify, like, and until next time.